To get into some of the week's top business headlines and other stories with me is Dr. Ola Brown, founder, Flying Doctors Healthcare Investment Company, which specializes in technology-enabled healthcare focused on public-private partnerships in Africa. She's also the author of the critically acclaimed book, Economics, Banking and Finance in Emerging Markets. So good to see you again,
Lovely
Dr. Ola. So one of the stories I really wanted us to get into was the story about Qatar signing a long-term LNG agreement with China, 27-year contract for LNG supplies. Tell us the significance of this transaction.
Well, it really upsets me because I don't know how many people know this, but actually, natural gas is Nigeria's most abundant natural resource. And the negotiations for Nigeria LNG actually started, the construction of Nigeria LNG actually started before the Biafra War. So we have known about the potential of our gas market for that long, since basically the inception of Nigeria. And after Nigeria LNG, we had, Brass LNG, which didn't quite go through, and then we had OK LNG project. We really should.
We also have Bonny LNG.
Yeah, well, Nigeria LNG is Bonny.
Yeah.
And even building the Train 7 for Nigeria LNG, which is Bonny, took a long time to get to an FID decision. And all of this time, I feel like Qatar is eating our breakfast.
So essentially, it's a missed opportunity.
Yeah, it's a huge missed opportunity for Nigeria because a 27-year fixed price contract is a constant credit alert for Qatar and something that we desperately need and were positioned to be able to get. And I just, every time I read the story, and now that you're even mentioning it, it makes me just feel a bit upset because we were perfectly positioned to get this kind of contract. And I'm happy for Qatar because it's great for them, but I preferred it for Nigeria.
Indeed, and it's quite a groundbreaking one. I mean, 27 years.
Most LNG fixed contracts are between 7 to 10 years. So 27
years is a major milestone. Of course. I like the way you put it, a constant credit alert. Now, let's go back to this whole infrastructure investment deal between Ramaphosa and Rishi Sunak. What is going, are the UK and South Africa rekindling the economic love interest, or what exactly is happening here?
So I think due to Brexit, most of the business that was coming into the UK, growing up in the UK, for instance, most of the business, even like I grew up in a rural community there, most of the business came from Europe. And now with Brexit and the way it was handled, the UK are having to look outside Europe, and they're exploring other opportunities and rekindling old relationships that perhaps they had neglected due to just the ease of business, doing business within the EU.
But it's also a positive thing for South Africa.
So it's definitely a positive thing for South Africa, and it's a positive thing for the UK as well, because infrastructure investment has historically been a way that Europe makes money. Don't forget, like 100, 200 years ago, all the American railroads were actually built with European money. And that time, the process was a lot harder because they were shipping the coins, they were shipping the money like 4 weeks across the sea to get to America. I think it's much easier to do that now. There's a lot more transparency, but infrastructure in Europe as a center, London and Paris have historically for hundreds of years been infrastructure finance centers. And even when the profits were repatriated, part of the reason why JP Morgan became so popular is because, remember, there were no phones, no email. You needed a person to be able to collect that money in America from the ship and repatriate the profits physically because there was no electronic banking. So London has been historically a center for infrastructure investment, and I think they're claiming that back.
Yeah, and it'd be interesting to see whether other African countries actually take advantage of the UK government.
And they're also really supporting UK export finance. So a lot of the companies that are building the infrastructure are actually UK companies. So it gives UK companies the opportunity to expand as well.
Yeah, interesting story. So this story out of Ghana. Ghana is asking international bonds holders to accept losses of as much as 30%, and it's suspending interest payments on foreign debt. What is happening with Ghana's debt situation?
What's happening with Ghana's debt situation is exactly the same thing that has happened to probably all of our listeners at some point. You borrow money to your friend and then he cannot pay back. And you know how annoying that can get with friends. So a lot of investors from across the world, including Nigeria, borrowed money to Ghana, and now they've realized that they've overborrowed and they cannot pay back. And that may seem like a small deal, but it's actually a big deal because these Eurobonds are backed by the full faith of the Ghanaian government. And once the government defaults on that promise, it has effects on people's willingness to invest and believe in that government. but also it has reverberations across all of Africa.
Absolutely.
Because the person in Atlanta or the fund manager in New York does not really know the difference between Nigeria and Ghana and Cote d'Ivoire and Senegal. They're all the same thing. It's Africa. So it actually creates a horrible effect for like a sovereign default like this, which it is effectively, even though kudos to Ghana, they've managed it well. Some people, they'll just not pay the coupon. And that's how you know that they can't afford it.
Of course, the risk perception premium on African economies, particularly in Sub-Saharan, is going to go up.
Absolutely.
But Ghana is also negotiating a $3 billion package with the IMF. It's been shut out of international debt markets. Is that package a rescue package? Or is that just not borrowing more money in order to pay down existing debt? What's the logic?
I'll go back to the example of borrowing money to your friends. If you have proved that you're irresponsible and cannot be trusted, and all your friends now start saying no to you, you have to go to somebody a bit more strict to take the money from.
Of course, that's going to come with conditions.
Absolutely. Yeah. So the IMF is called the lender of the last resort because most people only really go for these kind of strict conditional loans when nobody else will give them money. And right now, Ghana has put itself in a position where nobody else will give them money. So they have to go to the lender of the last resort. And that involves a lot of terms and conditions. So part of the reason why investors are having to take a haircut of 30% plus no interest payments for the foreseeable future is because the IMF wants to see that you're no longer a spedomaniac. So that your friend, probably when you borrowed money to him, he went to go and spend it on cars, he went to a club, so, the IMF wants to see that you're now responsible.
Essentially disciplining around spending.
And you have what's called debt sustainability, and you've negotiated with the people that you're owing, so you're not going to be spending so much more than you make. But for investors, it just creates a really bad precedent.
Of course.
Because sovereign debt, and even basic corporate finance, every decision that we make is based on the so-called risk-free rate of the sovereign. But now we've realized that the risk-free rate isn't exactly risk-free. And a lot of Nigerians are invested in that bond are asking themselves, like,
what's going to happen?
What's going to happen, number one? And is enjoyment not a better option?
Interesting. I really love the analysis, Dr. Ola. We could spend all day on this, but before we run out of time, I want us to touch on what is happening in the tech world and social media. A lot of startups, some of the big tech players, Amazon, Google, Robinhood, they're all laying off workers, cutting the workforce by 30%. Is this a sign that they're all anticipating recession and so going into a period of belt tightening, or what is happening here?
Absolutely. So the American Federal Reserve has been raising rates. And, somebody says that everybody looks like a genius in a low interest rate environment when money is so cheap to get. But once you're getting to 4%, 5% on treasuries, then the American economy actually, exactly what the Fed is trying to achieve. The Fed is trying to rein in liquidity and take money out of the economy and stop people spending. But where do Americans spend money? They spend it on Amazon. They spend it on
tech gadgets.
Absolutely.
Yes.
So when you're taking money and liquidity out of the economy, which the Federal Reserve is trying to achieve to control inflation, then all those tech companies really, really feel the brunt. And also tech companies run on cheap money, right? Venture capital is the cheapest form of money ever, right? You get these inflated valuations and they're invested at like very, very high valuations. So venture capital is very, very sensitive to interest rate rises because the first thing that investment managers or pension fund managers cut is their venture capital allocations, because in a high interest rate, why take that kind of risk when the risk-free rate in America is actually a risk-free rate, more or less, because America has never defaulted, as far as I know, on any debt. So when the risk-free rate is going up to 6%, why do anything else?
So do you see these layoffs? Is it just a phenomenon for tech and social media, or will this spill over into wider industries across the global economy?
Definitely, it's going to spill over. And I can see, if you look at the American stock exchange now, we're still probably 20% above what it was pre-COVID. So I don't think we've reached the bottom. So I think it's not a tech phenomenon at all. I think it's going to affect economy. Well, it already is. Like the stock exchange prices and the prices of stocks are going down. So it's going to affect the entire American economy. And when America coughs, the rest of the world catches a cold. So we're going to see sort of recession in most sectors. But I still feel like the energy sector might be an interesting sector to invest. And also when stocks are down, that's the best point
Indeed.
to invest. But you just have to make sure that you're quite near the bottom before you start investing. And I'm not sure that we've quite reached the bottom.
We're not out of the woods yet. Let's see, a global recession maybe on the horizon. So great speaking to you as always, Dr. Ola Brown. Thanks for joining us today.